Hello, happy Friday and good morning to all. I'm back. So welcome to today's daily dose of market insights by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So very good morning to all. Today is Friday, the 29th of September. So and as well as before we start, let's take a look at the disclaimer slides first. All right. Okay, so leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product. So as usual, three key takeaways from our daily dose of market insights will be a recap of what happened yesterday in terms of market movements, key highlights such as macroeconomic data releases, and as well as events. And secondly, what are the key economic data or events to look out for today? And to round up, we were actually sharing a short-term technical outlook on the various asset classes that has or I would say that exhibited interesting technical configuration. So yesterday, I was actually away. So a very quick recap on the broader base, what happened on the market movement first in terms of broader base asset. So what we could see over here is that the ongoing risk-off scenario that took shape about 1.5 months ago, yesterday it started to subsided, looking at the US benchmark stock indices as a proxy. So what's interesting over here is that the US benchmark stock indices yesterday staged a rally after an initial loss at the start of the first hour. So all the indices actually closed in the green yesterday, with the SPX up 0.6%, the Nasdaq up 0.84%, being one of the top performer, the Dow Jones up 0.35%, and the Russell 2000 up 0.87%. And what's interesting over here is that for those who actually followed our daily dose of market insights, we do have a bearish bias short-term condition as the day progresses for the benchmark US indices, where we covered the Nasdaq 100 and the Dow Jones Industrial Average. So what's interesting over here is that the low on this before we go for a break on yesterday Thursday, the intraday low on Nasdaq 100, it printed 14,445. So that was Wednesday, very close to that key short-term support level that we mentioned, 14,370, before yesterday rebound take shape. And what's interesting over here is that the Dow Jones Industrial Average hit exactly the support level, 33,360, before yesterday rebound took shape. And most importantly over here is that the one of the worst hit index in Asia, which is the Hong Kong 33 index, the Hang Seng, didn't print a low that was printed on this Monday and started to shape a big rebound. So where do we see the benchmark stock indices from here? Okay, so later I'll share in the short-term technical outlook. So now let us have a quick recap over here on what other events that took shape last night or yesterday, I would say, pardon me. So now let me hide my screen. So let me focus more on the screen instead. Over here. All right. Okay, so now one of the event that took shape yesterday will be this over here. So there was some actually news flow stating that China, US and China, there could be a year-end meeting between Xi and Biden due to some so-called diplomatic breakthrough. Okay, so that actually also one of the news flow that actually reinforced yesterday's rebound as well that's seen in the US stock market. All right, so then after that, we also have another positive news flow from China's one of the local media stated that presidency actually vowed to actually start efforts to actually meet annual economic goals, okay, for China. So that also kind of reinforced this, I would say it's more like a rhetoric, but it kind of very interestingly reinforced yesterday's minor risk on movement that was seen in the US benchmark stock indices. Then also most importantly, it also kind of prevent the Chinese yuan from shaping further weakness, despite the fact that the US dollar index shape continue to actually shape higher high in the start of this week. So very interestingly over here is that previously we did highlight over here is that the dollar was actually strengthening against the European currency pretty rapidly. The K-shaped performance scenario that I'll share with you all again. But however, the dollar CNH, the Chinese yuan, actually didn't break above the start of this month high, despite the fact that the dollar start to strengthening. Okay, this dollar CNH, and if you look at the dollar index, okay, this is the dollar index. So the dollar index going to surpass higher high, okay, and broke above the 6th of September high. It means the start of this month and going to shape higher. But however, if you look at the dollar CNH, it's not doing much headway after the 8th of September high and start to shape lower high. And right now, it starts to actually be congested between these two key short-term level at 7.3165 and 7.2330. Okay, these two range. So overall, what we could see over here is that despite the fact that we have a lot of couple of at the start of this week, there is we call it a negative news flow from China, from China Evergrande. But however, the CNH didn't actually weaken further. And also given the fact that yesterday we start to see a bit of risk on behavior in the US stock market, that could actually potentially shape into a consolidation or a technical rebound on the China stock market, or given the fact, or the China proxy, which is Hong Kong over here. Then bear in mind that on the later I'll share more on the FX market again. So the FX market yesterday also, the dollar also starts to actually shape a pullback, especially the weakest currency, the sterling dollar managed to actually survive the 1.2130 support level that we mentioned on Wednesday, before we go for break yesterday. Okay, now another event that I highlight over here is this. Let's go to the economic data. So on the economic data front, right, on today morning, Friday, just a while ago, Japan data. So there's a slew of Japan data that came out this morning. So let me put it highlight over here. So we have the leading Tokyo CPI data. So this is for the month of September. So Tokyo tend to, I mean, is leading because it always released 2 or 3 weeks earlier than the nationwide Japan inflation data. So bear in mind, this already is for the month of September. So for the core rate, the ex-food, ex-energy rate, it actually dipped down slightly from 2.6% on the month of August to 2.4%. Okay, similar for the headline inflation, as well, dipped down slightly from 2.9% to 2.8%. So overall, right, inflation start to actually start to temper off slightly, especially look at the core rate over here. Okay, if you look at the 5-year trend, it start to dip down slightly, but the trend is still pretty steep since the low of 2022. So overall, inflation still remains kind of elevated, despite the fact that yes, it's only 1 month, it starts to cool down, but it didn't break below this low that was seen in the month of this is August, so this is July level. Okay, so overall the core rate, right, the ex-food ex-energy, the Tokyo area ex-food ex-energy for September still remain elevated. Then now, what's other data over here in Japan is the retail sales. So retail sales, right, is talking about consumer spending. So year on year, right, it came in at 7%, almost the same rate as this August as July rate, but managed to beat expectation of 6.6%. So all in all, what I'm saying over here is that the consumers in Japan actually continue to spend, remaining robust over here. So overall, the Japan economic data still remain resilient. There is actually no signs of what I call slipping back into deflationary pressure at this point in time. So what you could, so that's for the Japan data. So what are the data to look out for? Even industrial production. So industrial production month on month, right, actually came in better than expectation. It was this preliminary. So it was negative 1.8% the previous month, but the negative, we call it contraction, reduced 0% and managed to beat expectation on negative 0.8%. Okay, so that's more of the industrial production side of the thing. Then if you look at over here, what are the key data to look out for going forward will be inflation data, the Eurozone inflation data later flash, so as a whole. So that's 5 p.m. Singapore time. Market is expecting a dip down again to 4.5% from previous 5.2%. Similarly for the core rate, so for the core rate, market is also expecting to actually inch down lower to 4.8% from 5.3% last month for the month of August. So this September figure is flash. So then most importantly, throughout the session, we have the US all important Fed preferred inflation gauge, which is the PCE price index. So that will be out at 8:30 p.m. Singapore time. So for the headline PCE index, market is expecting to actually increase year on year to 3.5% due to higher oil prices of this 3.3% that was printed in the previous month of July. But for the core one, market is expecting to dip to 3.9% from 4.2% printed in the month of August. So it's very interesting to see how the PCE data turns up, given the fact that we start to see a rapid increase in oil prices in the last 3 months. That's increased by 20%. All right. Then also we have the consumer sentiment. That's the final data for the month of September out at 10 p.m. Singapore time. So market is actually expecting a slight dip. Means no change. The previously was the preliminary was 67.7. So market expect to stay at 67.7 as well. A dip from the previous month of 69.5. So that's pretty much explainable why, because of the higher gasoline prices in US that start to seep into consumer sentiment. Do not forget over here is that there are various what I call pre-COVID we call it stimulus, like the forgiven of the that loan student loan program will start. Students will start to actually kickstart their student loan program going in the month of October. All right. So now very quickly, these are the to sum up, these are the key economic data to watch out for. So now let's immediately go down to the short-term technical outlook. So let us start from the FX market first. So on the FX market over here, this is the rolling 1 month performance as of today. So I could see over here the initial K-shaped performance, right? That the dollar was strengthening against the European currency, against the Swiss, the sterling, and euro. So right now the K-shaped performance has starts to revert downwards over here, very similar to the dollar yen as well. Going in line with the rest of the other currency that is anchoring around the CNH. So you see the CNH was pretty much stable in the last 1 week or so. That actually give a bit of dollar what you call it stabilization, or less dollar strength against the Aussie dollar, against the CAD, against the Kiwi, and against the Sing, because all this currency tends to move in line with the CNH. Then dollar CAD is actually due to the fact of higher oil prices. Okay, so this very so if you look at this 1 month, if you look at the rolling 5 day over here, is pretty much more obvious over here. So the dollar has starts to doing signs. The dollar strength against the European currency has started to show signs of what I call mean reversion to the downside over here. So what's interesting over here is that the weakest previously was the dollar against the sterling, so the sterling dollar managed to actually found support at the 21.30 level. If you could recall, we did mention that we have a neutral stance on Wednesday. So now let's go to the individual FX pair technical outlook. Okay, so now let us start with the sterling dollar first over here. Okay, the sterling dollar. So sterling dollar previously we went neutral to between 21.30 level. Okay, printed a low on Thursday yesterday at 21.10, then before shipping a bounce. So the key thing over here is that why the 21.30 returned neutral earlier, because the dollar medium term downtrend has already hit the lower boundary of this descending channel that is in place since 14th of July or mid of July. And what's interesting over here is that yes, the lower low print over here, okay, the RSI managed to shape a higher low right at the oversold region. So indicate to us that graphically we have a key medium-term support that's being met. Momentum start to show signs of what I call downside momentum dissipating by this bullish divergence on the hourly RSI. So all in all, that's actually supports or advocates this potential short-term counter trend rebound that could take shape within a medium-term downtrend for the sterling dollar. So that being said, over here we will actually now have a short-term bullish bias for this short-term counter trend, as long as 121.10 key short-term pivotal support holds. Next resistance 122.70, a break above potentially exposes 123.70 resistance, which is also the 20-day moving average coming to act as a resistance as well. All right. So, however, if we start to have a hourly close below 120, 110, then this short-term bullish bias counter trend rebound scenario will be invalidated to see a further push down towards the next support level at 120.50. Okay, and also given the fact that today is also month end and quarterly end as well. Okay, there could be what we call it a reversal of movement due to quarterly end and month end flows. Now with the euro dollar, so euro dollar on the previous break on before Thursday break on Wednesday, we do anticipate a residual push down. So the residual take shape and hit the support level at 105.15 level. So and also it also coincide with the lower boundary of this descending channel, this medium term descending channel that is in place since 18th of July high. All right. So right now, given that the support level has already been met over here at this point in time, and the RSI already starts to inch up and goes above the 50% level. So all in all, what we could see over here is that this downside momentum has already been dissipated as well. So we were using 104.80 as my key short-term pivotal support for today to have a short-term bullish bias counter trend rebound scenario. Next resistance to watch 106.30 above 106.70/107.10, which is also the 20-day moving average and as well as the upper boundary of that medium-term descending channel. But however, if we start to see an hourly close, a breakdown of hourly close below the key short-term pivotal support of 1.0480, then this short-term bullish bias counter trend rebound scenario will be invalidated to see a continuation of this impulsive down move to test the next support at 104.20. Okay, now on the dollar CAD, so recall that dollar CAD on Wednesday we have a key short-term pivotal resistance at 135.40. This level was actually tested, shaped that bearish reaction right at the 134.40. So that is indeed a key short-term pivotal resistance, which I highlighted why, because graphically it also confluences graphically minor swing high of 14th of September, 15th September, and confluencing with the 20-day moving average. So still no change, still use 134.40 to maintain that short-term bearish bias on the dollar CAD, with the intermediate support coming in at 134.40. A break below 134.40 reinforces this short-term bearish bias towards the next support at 133.70. But however, a clearance with an hourly close above 134.40 invalidates this short-term bearish bias to see a squeeze up towards the next resistance at 135.90. All right, so now what's cooking on the dollar yen? So dollar yen is a bit tricky over here given the fact that we do see a bit of movement, sideways movement below that 149.45 key short-term pivotal resistance level. So a bit of whipsaw here. So I'll be still using 149.40 as a short-term pivotal resistance. But however, I do have a downside trigger level, which is this level here at 149.15. It got to break below 149.15 to at least see a substantial pullback towards the next intermediate, towards the near-term support level at 148.40. However, if we start to see an hourly close above 149.45, then this short-term bearish bias will be invalidated to see a squeeze up to test the major resistance at 149.80/150 figure level on the dollar yen. Okay, now moving on will be the indices. So let's go to the indices over here. So let us start with the the Dow Jones Industrial Average. So the Dow Jones Industrial Average, previously we do have that 360 as my short-term support level for that bearish bias condition that we have on Wednesday. Puke down, exactly hit the support level, but the RSI over here do not actually shape. Yeah, hit oversold, but it do not have a bearish divergence. Lower low as well. It do not have a bullish divergence. Pardon me, bullish divergence. A bit of tongue twister. Today is Friday, so lower low similar lower low on the RSI, so no bullish divergence of higher lower. So overall, I would say that I will turn neutral right now because it's still holding below the 200-day moving average. So neutral for today, that means sideways, kind of sideways for the Dow Jones Industrial Average or the US Wall Street 30 between 33,800 and 33,360 level. Okay, given the fact that the short-term support has already been met. So neutral between 33,800 and 33,360. Unless you have an hourly close above 33,800, then we could potentially validate the start of a potential short-term counter trend, bullish condition bias scenario towards the next resistance at 34,150. But however, if we start to see an hourly close below 33,360, then potentially we could continue this this impulsive bullish movement to test the next support level at 33,160, followed by 32,990. Okay, so that's for the US Wall Street 30. So very interestingly, let's take a look at the Nasdaq. So Nasdaq, what you see over here is that the rebound that actually took shape right at the 28th of December, we call it 28th of December ascending trend line support level, almost hit that level because at 14,300. So the low was printed at 14,445. Okay, so that's a low, but still below the 50-day moving average. So there's some support already been met. So if you look at the hourly chart on the Nasdaq 100, so hourly support will be met on the longer time frame chart. So previously we have a level of 14,370. So that was my support that was being established on Wednesday for that bearish bias condition. But given the fact that a longer term support has already been met at 14,445, and plus also very interestingly, the Nasdaq 100 actually shaped a bullish divergence. Lower low, okay, not lower low, pardon me, over here, the Nasdaq 100 over here actually didn't break, it actually shape this bullish breakout, the resistance of the bullish breakout, not divergence. Okay, over here previously there was a resistance break, retested. Okay, so there's a momentum bullish breakout on the hourly RSI, indicating to us that the short-term bearish momentum has kind of dissipated, okay, due to this RSI momentum bullish breakout, okay, on the hourly chart. So all in all, I could see over here is that this Nasdaq 100 potentially could be shaping a counter trend, short-term counter trend rebound scenario. So we will actually have a short-term pivotal support for today on the Nasdaq 100 at 14,560 level, which is close to yesterday's swing low. As long as this level is not surpassed on the downside, this Nasdaq 100 potentially could test the next resistance at 14,860. A break above it potentially take us higher towards 14,980, which is all coming close to the 20-day moving average. And if we do the Fibo retracement of this last push down, the last impulsive down move, these two levels is actually the 38.2% and the 50% retracement as well. But however, if we start to see a breakdown with hourly close below 14,560, then this short-term bullish counter trend scenario will be invalidated to see a continuation of a push down towards 14,450 / 14,370 on the Nasdaq 100. Okay, now moving on will be the German 30 index. So on the German 30 index over here, we have a support level on on Wednesday at 15,020 / 14,930. But however, if the yes price going to shape lower, but it didn't hit the support level at 15,020 / 14,930, but it start to shape a bullish divergence on the RSI. Okay, lower low but higher lower. So all in all, right, elements right now indicating that bearish momentum has started to dissipate as well, with the appearance of this bullish divergence on the hourly RSI in short term. So in short term, right, for today, we'll turn neutral, very similar like the Dow Jones Industrial Average between 15,430, which was the minor swing congestion area of 25th of September and 26th of September, as well as this yesterday's similar swing low of Thursday at this 15,130 level. So neutral between 15,130 and 15,430. level. So unless we have hourly close above 15,430, then potentially we could see a counter trend rebound, short-term counter trend rebound to retest the 200-day moving average, also acting as a resistance at 15,600 level, okay, which was also the former minor range support, now turns to pullback resistance as well. However, hourly close below 15,130, a breakdown below 15,130, then we potentially could see a continuation of the impulsive down move towards the support level at 15,020/14,930 level. Okay, so lastly on the index will be the Hong Kong 33 or the Hang Seng Index. So Hang Seng Index, still recall that on Wednesday we have a short-term pivotal support level at 17,370 for that potential minor counter trend rebound. So that rebound almost take shape already. It actually coming close, is actually hit the 17,870 level, almost there. So what we do over here is that we still could maintain that short-term bullish bias with 17,370, but as the 17,870 got to break out to actually reinforce a further bounce towards the 50-day MA, which is so close to that minor swing high of 15th of September at 18,370. But however, if we have hourly close below 17,370, then potentially this short-term rebound scenario will be invalidated to see a continuation of the impulsive down move to test the next support level at 16,800. Okay, so bear in mind over here is that next week there will be a gold, because now it's a midterm vegetable. So next week there will be a golden week in China. So China will be closed for almost the whole of next week, golden week. So liquidity may start to get thinner on the Hong Kong market starting in fact from today and stretching into next week as well, due to the golden week holiday in China next week. Okay, so now that's for the index. So lastly, let's take a look at gold. So gold, very interesting over here. It plunges together with the strength of the dollar seen on Wednesday and Thursday. So what you could see over here, gold actually broke down below the 200-day moving average. Broke down and also plummeted below the 28th of August swing low area at 18,850. So actually there was a huge plunge in gold yesterday. So due to the fact of dollar strength. So what we could see over here is that gold over here, very interesting. The RSI has started to shape this bullish divergence as well. And given the fact that just now I shared with you all the technical configuration on the majors, the euro dollar and the sterling dollar has started to show that the recent week of very steep dollar strength movement, momentum has started to dissipate for dollar strength, where potentially you could see a dollar strength pullback story shaping into today and potentially shaping into today due to the technical elements that I shared with you earlier on the FX pair. So gold could actually see a bit of reprieve or a counter trend rebound as well after yesterday 2 days of steep move on the downside. Yeah, plus we start to see a bullish divergence on the hourly RSI. So I'll be using 18,560 as my key short-term pivotal support level. So what's 18,560 is, in fact, if you go to the daily chart over here, okay, it's close to this former swing high of 2nd of March. Okay, 2nd of March high. Okay, then if I were to go to 1 hour, let me go to the hourly chart over here. So this will be my key short-term pivotal support for today, but it got to for a potential bounce to the intermediate resistance at 18,074 level, break above 18,885, which is the former swing low of 21st of August, now turns into a pullback resistance level. Okay, so now, but however, if we start to see a breakdown below 18,560, then this impulsive down move should continue to test the next support level at 18,020/18,008 on gold, which is the spot gold, which is the XAU/USD. So what's 18,020, 18,008? So 18,088 is in fact the medium term descending channel. That's in, okay, it's actually a medium term descending channel that is in place since 4th of May 2023 high. All right. Okay, so with that, that's pretty much sum up for today's daily dose of market insights. So I wish you a great day ahead and a good weekend. Have a good rest. So we shall speak again on next Monday. Thank you.